Ladies and gentlemen, welcome to this week's version of Nickels and Dimes, our weekly video series. The quote of the week this week comes from Epictetus, who said, "It's not what happens to you, but how you react that matters." It's not what happens to you, but how you react that matters. Well, this is very true, especially in the world of finance or financial planning or investment planning, and how it affects you specifically. In this video, we're going to talk about taxes. Now, we have a new administration coming in. Whether you like that or not, it is what it is, as they say. And some of the new administration, the Biden administration's proposal, are to increase taxes on a certain segment of the population. Of course, there are some benefits on the other side, but the question is, assuming some of these proposals are actually implemented into law, how are you going to respond and make adjustments to your portfolio or your financial situation, if you are at all? So some of the proposals are, for example, repeal some of the tax benefits of the Tax Jobs and Cuts Act, raise top ordinary income tax rates. As you may recall, they're 35 and 37%. The proposal is to raise them up to 39.6%. That was the top marginal rate before Trump came into office. Talking about increasing corporate tax rates and have a minimum tax for companies that book profits over 100 million. Talking about capping itemized deductions up to 28% for those taxpayers making more than $400,000 a year. Talking about completely phasing out Rule 199A for those over $400,000 a year, and also talking about bringing back the step up in basis. As you know now, or some of you may know, when you pass away, your beneficiary receives the step up in basis. In other words, your beneficiary's cost basis is the fair market value at the time of death of your asset. So the new administration is talking about getting, eliminating that. There's been a lot of proposals over the years, specifically with step up in basis. So whether that happens or not is anyone's guess. So at the end of the day, again, the question is, all these things are happening, potentially happening with the new administration coming in. So the question is, how are you responding to it? So again, it's not what happens to you, but how you react that matters. That is the key. So what that means is, are you now, because tax rates are likely going to go up for higher, taxpayers, if you are in that higher tax bracket, are you transitioning your investable assets to more efficient assets? For example, maybe you want to consider moving money into some tax-free bonds or deferred accounts like deferred annuities. Some of the dividend-paying stocks maybe not be as attractive because, again, depending on your tax situation, you may be negatively affected. So, and the question is, again, what are you doing to react to what the Biden administration is likely going to implement in terms of tax implications to certain taxpayers? If you don't know, you can find out by talking to a professional advisor, whether they're a CPA or maybe you're even your own advisor. To that end, if you would like a second opinion on your tax situation, we're happy to give you a second opinion on what we may consider would be prudent moves. You could send me an email at cnichols@nicholswealth.com or go on our website at nicholswealth.com. Click on the second opinion services tab. You can click to learn more about what we do. In the meantime, thank you again for watching, and I wish you well. And thanks again for watching. Bye-bye.